we were really not looking for an acquisition. We were pretty set on continuing to build and grow. We think we were on the cusp of something interesting, and I think in retrospect we were pretty early into this opportunity. But it was interesting when Apple expressed their desire to acquire the company, but also not just acquire the company, but also to invest in the team, invest in the opportunity, continue to build the brand. So that was an interesting opportunity, and it was definitely not an easy one. I think we had some pretty interesting discussions and debate about whether this was the right thing. But I think ultimately, if we were really honest with ourselves, and you wrote a list of who the top 5 acquirers for Platoon could have been, Apple probably would have filled every spot, right? Because they are not just another tech company, but they're also a tech company with creativity at the heart of what they do.
Hi everyone, I'm your host Rohit Bhargava, and you are listening to episode 172 of the Startup Playbook podcast, a weekly series where I sit down with successful tech founders, investors, and operators to unpack their journey, lessons, and insights to help current and future entrepreneurs. The voice that you heard a little bit earlier was that of Ben Grabiner, the co-founder and general partner at Sage Ventures, and our guest for this episode. There are few people in the Australian startup ecosystem with as much relevant experience on both sides of the table as Ben. He was an investor at Local Globe, one of the leading venture funds in UK and Europe, before jumping into starting Platoon, a platform to help discover and develop the very best emerging creative talent, including the likes of Billie Eilish, who they helped to discover and release her first song. Platoon was later acquired by Apple. He's now back in the investment chair as the co-founder and general partner at Sage Ventures. In this interview, we covered a range of topics, including Ben's experience as a co-founder of Platoon and what it took to launch and grow the company, and ultimately the decision to sell to Apple, lifting the lid on what Ben looks for and their process when investing through Sage, why Ben thinks of VC as a product and the specific metrics they measure to ensure that they're on track despite the long feedback loops, why now is the best time to build a startup in Australia, and much more. But before we get into this interview, for those of you that have followed me and this podcast for a few years would know that many years ago, I was involved with bringing a B2B SaaS accelerator program from the US to Australia. One of the main challenges that I saw for companies back then, as well as what I'm seeing right now in companies that I'm investing in through Playbook Ventures that are selling to large enterprise customers, is how difficult, time-consuming, and expensive it is to get ISO 27001 and SOC 2 compliance. These certifications are so important for building credibility and trust with large enterprise customers, but can be such a big distraction and operational drain for early stage startups. Thankfully, there's a tool to help with this. Vanta helps businesses to get and stay compliant by automating up to 90% of the work for the most in-demand compliance frameworks. There are over 6,000 fast-growing companies that use Vanta to manage their risk and prove their security in real time. To find out more or connect with a local team member, head over to vanta.com/playbook. And once you've gotten compliant and landed your large enterprise customers, you want to make sure that you have your finances under control. Sender is the OG startup accounting firm in Australia. They have a dedicated focus on founders, funders, and startups, and have an experienced team that can help you with everything from balancing your books to managing your tax to even, down the line, helping you with your exit strategy. I trust and use them with all of my businesses and can't recommend them highly enough. You can find out more or get in touch with Gareth and the team at sender.com. With that out of the way, and without any further ado, here is my interview with Ben Grabiner. Hi Ben, welcome to the Startup Playbook podcast. This has been a long time coming, so glad we can finally make it happen, and thanks for coming on the show.
Hey Ro, thanks for having me.
So Ben, for those people that may be not as familiar with you or your background, do you want to share a little bit about your story and what got you here today?
Sure. So you could probably hear from my accent that I didn't grow up in Australia, but I moved over here from the UK about 2.5 years ago. So I grew up in London, started my life as a management consultant. Then I started my first business called Pollenize, which was in the video ad tech space. I learned a lot of lessons very quickly. Ended up pitching a VC that business, and instead of getting investment, I ended up getting a job. So went to work for Local Globe. It was the first employee at Local Globe, which is a seed fund based in London. And then spent a couple of years there, which was a fascinating experience building a new early stage venture fund in what was still relatively early days in the UK venture ecosystem. And then left to start a business called Platoon, which was a wild journey. Basically started as the YC for creative talent, trying to do for creative talent what what was a pretty well-worn path in venture. Ended up having an interesting experience with that, selling that to Apple, and then moving over to Australia with my Australian wife and launching Side Stage Ventures, which started off as a syndicate and is now a seed fund. But I'm sure we'll dive into a lot of that.
Yeah, I mean, so many things to talk about. We were briefly talking about the football beforehand, which we're not going to cover on this podcast because...
I thought you might not want to mention that.
Yeah, no, not a fun weekend for Liverpool, unfortunately. Moving on. It's such a fascinating story that you had, as you mentioned, going almost back and forth between VCs and founding companies. Maybe going right back to the start with Pollenize. What was that experience like of trying to pitch a VC to get funding and being offered a job instead? Was that a difficult decision for you to leave Pollenize and join Local Globe?
Basically what happened was we built out this platform. We took branded video content and distributed it onto publishers' websites. So we did deals with a whole bunch of major publishers in the UK. And we had a good little business that was generating a bit of revenue. And we thought, okay, this is a venture backable business. And we learned pretty quickly. It was a pretty steep learning curve. We were probably about 3 years too late to building a ad tech business. We were not ready. What I know now was that it was not a kind of venture backable business, but I had it was a really deep learning experience. One of those conversations I had with Saul Klein, who at the time was at Index Ventures, it was like, look, this is not a backable business, but if it doesn't work out, come back and let's have a chat. And so by the time I kind of went back and had that conversation, I was ready to figure something else out. And so it wasn't a matter of, it was really the first kind of entrepreneurial experience I had. And it was like having cold water poured over your head relentlessly.
Yeah. I mean, was that getting to that point, realizing that maybe it wasn't what you thought it would be with Pollenize? Was that a difficult point for you to reach?
I think I was at the stage in my career where I got pretty comfortable that I was taking a big gamble on this. And when it turned out that, we had a few offers of investment, we decided as a team it didn't make sense to go down that route. When I got the opportunity to go and work with someone like Saul, who had the level of experience that he had as a co-founder of Love Film, a co-founder of Seed Camp, setting up a new fund, it was like, this is the logical next step on my journey. It was not even bittersweet. It felt like, this didn't work out, but I'll be back to building something new at some point. It was just a matter of when.
Yeah. And so what does launching an early stage seed fund look like in the UK?
It looks quite similar in the UK as it does in Australia or anywhere else. I think what was quite interesting about the time, 2015 in the UK, was the first 12 pages of the LP deck was telling a story about why you can build big businesses in the UK and why you can build unicorns in the UK and why you don't have to just be in the Valley. And at the time, that was not necessarily a consensus view. Everybody still thought you had to be in the West Coast to build a tech company. And now you look back 8 or 9 years later and it's almost laughable that people didn't see that, although plenty of people didn't see it. And actually, it's quite analogous, I think, to the time that we're in Australia, where we're just getting past this point where for many years people have questioned whether you can build really big businesses in Australia. I think we have now just enough proof points to show that it's possible. If you back the right, with the right teams, with the right founders, you can. But it takes time for people, for investors to understand that and see the opportunity.
Yeah, I was about to say, it sounds very similar to what I imagine it's like telling the story in Australia as well. It seems like, as you said, we've gotten over the hump a little bit. Going back a couple of years to this Blackbird's origin story of this starting this 10 years ago, that was very much what they had to do, was prove out that actually really big businesses can be built over here. Having fundraised for the first fund for Side Stage, did you find a similar kind of sentiment when you went out to market to pull the fund together, or has that sort of shifted and it's more kind of focusing on the sort of specifically the opportunity that Side Stage is going after?
Look, I think it depends who you speak to. There's increasing kind of sophistication in Australia. I think what the most recent generation of kind of breakout fund managers, the Blackbirds of the world have done, they've done a huge amount for educating the whole ecosystem, for educating founders, educating investors about what the opportunity is, about how to build businesses, how you can build global business. I think they actually deserve quite a lot of credit for setting that up, and what that's created for us as somebody who's building their first fund in 2023 is that there is a level of understanding about what venture capital is here, which Probably when Blackbird were raising their first fund, there was less so. But I think there's still a lot to be done. I have a huge amount of conviction about the ability to build enormous businesses in Australia over the next decade. And a lot of the building blocks are in place now. You've got several companies that have done it before. You've got pretty supportive government, tax incentives. You've got a handful of the best universities in the world. You've got global talent coming back to Australia to build stuff. You've got really talent that is as good as any in the world. And increasingly, in a kind of post-COVID world, you can build businesses from anywhere. You can raise money from the best investors from anywhere. So with all of these kind of features coming together, there is this enormous opportunity here, and it's on us to take that opportunity. And it's on us as emerging fund managers to tell that story and for investors to see the opportunity. And so I think there's definitely a high level of education, but I think at times there's an opportunity to be even more ambitious than we perhaps are.
I do want to come back to obviously side stage and kind of looking at it from an investor lens, but you spoke about opportunity, and I think just a story with Platoon and having spoken to you about it and knowing a little bit about it, I think it's just a fascinating journey, which I'd love to dive into. Or what was that kind of initial catalyst like to shift gears from looking at it from an investment perspective to going, actually, I want to get involved in a deeper, more operational way?
Yeah, I think one of the big drivers for me, I was a relatively junior VC at the time at Local Globe, and I absolutely loved the job. I loved working with founders. I loved understanding their business. I loved trying to help them bring their creations to life. But there was a niggling sense of doubt in the back of my mind about who am I to be telling you, brilliant founder, how to run your business. And so a bit of me wanted to build something myself and prove to myself more than anything else that I could, and spend a bunch of time, got very interested in this opportunity, which was as these whole bunch of effectively creative platforms, so the likes of YouTube and Spotify and Patreon, and at the time there was Wattpad and a whole bunch of others, these platforms that enabled this new generation of talent to build businesses. And now it's called the creator economy, but back then it was just like people figuring out that they could have a podcast and they could build an audience and they could sell stuff to people at the other end of the world without any middlemen. We looked at that and we're like, this is really interesting. And who is supporting this talent? In venture, we have this thing that is very well-worn. Even back then, 2015, it was a very well-worn path, which, you find great entrepreneurs, you back them with capital, you give them support with your kind of network and help them build great businesses. And what we wanted to do was do that for talent. Go and find great emerging creative talent and invest in them and help them to build big careers or businesses off the back of their creative talent. And back in the day, it was actually the first slide of our first deck was the YC for creative talent, and that was really what we set out to create.
It's really cool. And it's a topic that I'm fascinated about because I think I had a very parallel opportunity that I was looking at, which was Stage Label. I don't know if you know much about that, but we were tagged as a crowdfunding for fashion platform. But very similarly, we were all about how do you help these creatives that are great at what they do, which is designing and creating products, but aren't necessarily the most business savvy individuals. How do you help them create more successful businesses and give them a platform to do that? What we found really challenging was having a kind of scalable and growing model off the back of that, because similar to venture, there's such a long tail of those types of opportunities which actually aren't quite right. So what was the model behind Platoon and how did you identify and capture that?
Interesting you say that. And I think the approach that we took was not about scale of number of people or scaling numbers, but scaling quality of talent. So from very early on, it was less about how many people can we get on our platform, how many users can we get, and it was really how can we get the highest quality. And so a bit like venture, VCs don't want to invest in as many companies as possible. They just want to invest in the best. And so we were from day one very curated. And I think actually that is what in some ways differentiated us from some of the other similar-ish platforms that were built around or came around that time. It was never about having as many people on the platform as possible. It was always about being very curated and thinking how you can back the best and build a company and a community and a product that the very best creative talent want to be a part of. in much the same way that we, as we were talking about before, as we do that in venture, is that how do you build the best possible product and community and fund for founders that founders want to be a part of.
And speaking of finding the best, to give some context to the listeners, you helped find Billie Eilish. To my understanding, you released her first song.
Nice.
Yeah, incredible. Mr. Easy as well, just incredible talent. What, I guess, it's pretty easy kind of looking back in hindsight and going, it's obvious. To my understanding, when we spoke about this last, you mentioned that Billie Eilish had like probably a couple of hundred listeners on Spotify or those sort of things. What are the commonalities between those kind of breakout stars? And was that something that you, within your team, identified that and said, we have to work with this person because we see something? Or was that kind of driven by data? Like, how did those sort of things come about?
Yeah, no, it's a good question. I think that my biggest learning has been that it's a combination of two things. It's a combination of data and it's a combination of people. And actually, and I'm going to use this analogy again because it comes up a lot, but you need a combination, it just like in venture where you can't, it's not just about which company's moving, it's also about having people who can understand and know what they're looking for. In music, it's the same. It's, there's actually a lot of, even back then, there was things like SoundCloud, which was a huge number of data points on SoundCloud, but you couldn't win just by stat ranking who's got the most views on SoundCloud. But the combination of kind of finding the data and having people in our business at the time who kind of understood A&R and understood talent and knew how to identify what was great, but was also able to attract that talent. And my business partner at Platoon, Denzel, had been in the creative industries for 35 years, knew what was good, knew what good looked like, but also had the gravitas to attract the best talent when we found it. And it's so many learnings. It's funny, so many learnings across Platoon, which was about how do you go and find the best creative talent, but also build a community and product and company that they want to be a part of. And we do the same things today, which is how do we use data to go and find the best talent, but also build a product and community and fund that people want to be a part of.
They're saying in ventures, there's three things that you need to be good at. One is having deal flow, then the ability to pick the right deal flow, or pick the right companies within the deal flow that you've got. And then finally being able to win allocation in that. And I think oftentimes from a founder perspective, it's...
And help afterwards.
Help, of course. Of course. Which I think is part of winning the deals as well. I guess from a founder perspective, if you're going out fundraising, you don't really see that on the investor side, but maybe to lift that lid in both your sort of experience with Platoon and with Local Globe and now Side Stage, how does Side Stage think about that? Or how do you personally think about that in terms of assuming that you've got the relationships in place and the right sort of vehicles to create that deal flow? How do you go about assessing what the right opportunities are for you to go after? And in highly competitive deals, it's actually really tough to get allocation. How do you think about positioning Side Stage in winning those allocations in those deals?
I mean, I can talk a bit about what we look for, but I think before that, there's two things that we as a venture fund really focus on. One is going out and finding this kind of top, these world-class founders that just happen to be building in Australia. So we're very focused on, you can do that in a number of ways. You can do that through relationships. You can do that through other founders. You can do that through data, which we do a lot of. So we spend a lot of time figuring out, making sure that we can find the best talent. And then we spend a lot of time making Side Stage, just like we made Platoon, the best possible partner to early stage founders. And that is everything from the community that we create. It's from the support that we can provide post-investment. It's even our check size, which is relatively small. So if you're a great founder and you have a competitive round, which often you will do, our check size is normally small enough that you can fit us in without having to kick other people out. And so we really spend a lot of time thinking about how do you find them, but also how do you build something that the best founders want to be a part of. And then you can get those two things right. That goes a long way to building a kind of long-term partner to the best founders.
And what does Side Stage look for?
There's three things. The first and most important is the founder and the founding team, and we look for founders with the kind of the hustle, the grit, the ability, the vision to build billion-dollar companies. And that means that they can lead and hire a team, they can win over investors, they can win over customers. It is often We love to see evidence in their background. It doesn't have to be a multi-time founder, but often there's evidence in their background that they have built stuff or had the hustle from a very young age. So really that's the most important thing, but also product is important. And if a product exists, then we love speaking to customers and hearing firsthand why they can't live without your product. It doesn't have to have lots of customers, but if it's got a few customers that really are passionate about the product, I think that says a lot. And if not, if it's pre-product, which we invest in sometimes, I think you look for a founder who's got a unique product insight or way of looking at a product solution that others aren't. And then the third one is, and by the way, none of this is revolutionary. You wouldn't have heard it before, but I think I'll put it in our own words. The other thing is the market size. It's got to be, we're not looking for 5 or 10x outcomes. We're looking for founders with to be really big outcomes. And that means it's got to be a big enough market. And often in Australia, it's got to be a global market because there's not that many domestic markets here that can support multi-billion-dollar businesses. And that's really the kind of 3 things that we look for specifically.
Yeah. And again, if you don't mind me mentioning this, it's funny because you can kind of hit a lot of those markets from a founder perspective. You can think that you check a lot of boxes for founders, but it looks different for every company, and I guess different partners within the specific fund might have very different viewpoints on it. So just to lift the lid a little bit, there's a company that we're investing in through Playbook Ventures that I know that you've been looking at as well. We've had some conversations with you and some of your team around those sort of things. It's like, personally, it's just fascinating how people look at different deals and the kind of different emphasis that they put on things. But do you want to maybe talk about how, for Side Stage, what does the decision-making process look like internally?
Internally, we've got the investment decision, or the investment committee is made. We have 2 general partners in the fund who make the final investment decision. But I think this is where this is why I love building a team and building. This is why I love building a fund and a business, as opposed to angel investing is great fun, but I think you can really having a team and a kind of diverse team that is able to bring different opinions to the table is invaluable, because the world is a complicated and different, weird place, and everyone has got their own biases in which they see the world. So we have very vigorous debates internally about companies, and we have a very strong kind of one team policy. We don't have this is my investment or your investment, but we have a really strong kind of collective and pretty vigorous debate about most of our investments, and then we kind of decide whether we're in or out. And that's made stronger by having a great core team of 4, but also venture partners who are venture partners like Alex and Anthony, who are building Linktree, but also contributing and supporting what we're doing. And I think getting the views of people who are actually in the trenches building businesses is really valuable, because that the kind of founder knowledge kind of wears off over time. The longer you get away from operating, the kind of you feel your skills get rusty.
I think that founder empathy piece is really important, though. I think for someone who's gone through that journey, not that you can't have founder empathy, but I think there's just a different level of understanding of that, of even just day-to-day decision making. Again, just going back to Platoon, briefly, you mentioned the acquisition by Apple. To my understanding, that sort of came about when you were actually looking to raise your Series A. So you'd just done 1 round of investment prior to that. Again, you were looking to raise more capital, expand further, and this kind of opportunity to be acquired came about. Again, what was that decision-making process like of going, do we double down on this and really go hard at this opportunity and where this could be, versus, I imagine, tough to say no to Apple as well. Yeah, would you mind kind of sharing what that process was like?
Yeah, we'd done a pre-seed round and we'd done a seed round, and I think the space was hotting up. I think we felt we were in a strong position, but it was getting competitive. And we were really not looking for an acquisition. We were pretty set on continuing to build and grow. We think we were on the cusp of something interesting, and I think in retrospect we were pretty early into this kind of opportunity. But I think it was interesting when Apple expressed their desire to acquire the company, but also not just acquire the company, but also to invest in the team, invest in the opportunity, continue to build the brand. Often what happens in the case of an Apple acquisition is they'll soak up the team and the company gets shut down. And this was quite unique because they invested in the Platoon brand. It's still a meaningful part of the software and content business today. And so that was an interesting opportunity. And it was definitely not an easy one. Like, I think we had some pretty interesting discussions and debate about whether this was the right thing. But I think ultimately, like, if we were really honest with ourselves, and, you wrote a list of who the top 5 acquirers for Platoon could have been, Apple probably would have filled every spot, right? Because they are not just another tech company, but they're also a tech company with creativity at the heart of what they do. And they were built from the iPod. And they're really, and iTunes, and they intrinsically understand music and the creative industries. And so they weren't, they were really uniquely placed to acquire Platoon and invest in it and grow it. And to be honest with you, having been through that process, they were amazing partners to deal with. They really were. Like, it went very well. They really did everything they said they were going to do, and it's been like it worked well for everyone, I think.
Yeah. And you mentioned that there were some very different viewpoints potentially internally when those types of offers come out, which is natural. What does that process look like in getting on the same page?
Without going into too much detail, it was a decent outcome, but from a venture investor perspective, it was like a good rather than like great outcome. There was definitely a venture capital viewpoint, which is like, why would you sell the business now? There's still plenty to run. But I think ultimately, there's a lot of lessons, as you can tell in this conversation, but once the founding team decides that it's the right move, and myself and the other founder were pretty aligned on this, once they decide it's the right thing to do, I think it's very hard to choose a different path. And it's not like it was I think everyone was on board, but ultimately if a company, if a team ultimately want to sell a business, it's like that's ends up being what happens.
Yeah. And I'm curious, do you think that shapes your thinking with SideStage and founders that are potentially part of your portfolio that maybe have similar opportunities? Like, I guess SideStage hasn't had to necessarily go through that just yet, but do you feel that sort of experience helps shape?
Well, look, I'd say a couple of things. I think firstly, I have a lot of empathy for founders on that journey and the reality of it, having been through it. And as a first-time founder, having a decent, if not venture scale outcome early on in your career is like, there's a lot of good reasons for the founder to do that. I think as an early stage investor in SideStage, it actually allows us to be quite aligned with the founder on making these decisions. And we can, obviously we want to back people who are going to build multi-$100 billion businesses, but sometimes it doesn't work out like that. And I think we're very attuned to the kind of the founder motivations around that. I think on the other hand, as a first-time fund manager, it's also pretty good to have experience of exiting companies and what it's like to sell as well as buy.
Well, out of curiosity, what does that process look like post-acquisition? Because obviously there's so much of the focus that kind of happens to get to that point. What does that look like from a founder perspective or from your perspective directly after the sale?
It varies massively. You hear all sorts of stories, good and bad. I think my experience was definitely on the good side of it, in that we started this process of integrating the business into Apple, getting to understand how that business operates, who the right people to help in that business are, how, where the synergies are, and ended up spending a bunch of time in California, in Cupertino, getting to know the teams, meeting with some brilliant, smart people, ended up hiring internal hires from within Apple who were like, it's unbelievable in terms of how they leveled up the business. And probably the biggest thing for me was actually opened up my eyes even bigger than before, because I think it's easy as an early stage startup to get bogged down in the the grind and the tactics and the kind of where's the next small win coming from, where's the next tactical victory. And then you get to Apple, and if you want to do something that's going to move the needle for Apple, you got to think really big. And you take away a lot of the constraints, obviously less budget and resource constraints, but the only thing that to do, you've got to be so ambitious and think so big in order to do something that can really move the needle and affect the bottom line at Apple. So it actually made me realize that we weren't thinking big enough at Platoon. And I think that's been a big learning for me when I talk to founders these days, is actually sometimes you have to step back and actually look at, really open up the vision and see what really is possible. And if you took away the capital and the resource constraints, what could you create? Doesn't mean that those constraints don't exist, but I think it helps you see the true opportunity sometimes.
Yeah, interesting. And specifically from a SideStage perspective, I guess, are you looking for founders that are already thinking big and come with that ambition, or looking for founders that have not stumbled upon something but have something that's working and helping them think bigger than where they're actually at?
Look, I don't think there's any kind of one size fits all rule, honestly. I think some founders come baked in with a kind of enormous vision. Some founders maybe underestimate it. But yes, I think it depends, honestly.
So one of the people that I spoke to as part of the research process for this interview was Casey, who you work with quite closely at SideStage. We've already covered on some of the topics that she kind of mentioned, but one thing she mentioned was that you have a very strong sort of product-led focus, even with the way that you build VC as well. And again, you've touched on a couple of things, but maybe without giving away the secret sauce at SideStage, do you want to share a little bit about how maybe differently SideStage thinks about investing and building a fund from a product perspective?
We think differently, but at the same time, the thing about building a venture fund, honestly, is a pretty tried and tested model. And there's thousands of other people out there who are doing it in some way, shape or form. And so, I think there's a lot to learn from some of the best early stage funds globally. And we think a lot about that. But I think ultimately it's like what we are building is a product and our customers are LPs and our customers are founders. And probably more than anything, we think if we can build the best possible customer experience for the founders that we back and build the best possible product for the founders we back, we think everything good is going to flow from that. And that's going to enable us to raise more capital to invest in the best founders. It's going to enable us to attract the best founders. It's going to enable us so much. Really right now, we spend a lot of time internally thinking, we're a small team, but where is the highest leverage? What are the highest leverage product features for founders? And that goes from the check size, the community, the network, the hiring support that we offer, the fundraising support. Which of those, or they're just a handful of the things that we think about, but like where can we focus our most attention to give the highest leverage to the founders that we back? So I think it is a lot like building a business, a lot like building a product with customers.
Yeah. One other thing that Em mentioned, which I think is, again, evident through your story of almost these instances where you weren't going down a particular path and then you got a bit of feedback or an opportunity kind of happened, is that you're very open-minded to just feedback and opportunities and those sorts of things as well. With venture, it's especially hard because the feedback loop on that is so long and into the future. As you're building up SideStage from the early stages, what are signals that you look for internally to make sure that you're kind of on the right track? Or I guess that there's that kind of balance between having a really strong conviction of what this kind of looks like longer term versus taking in that feedback in shorter cycles and going, actually, we need to not pivot massively, but we need to adjust and change and kind of evolve into things. Yeah. How do you think about that from a...
Yeah, look, I think the feedback cycles, obviously, in venture, it's nice of them to say that. And I think, firstly, I'd say that I think venture can be a collaborative business, and actually the diversity of opinions that you can bring along with you is enormously valuable. But to answer your question, venture's a long-term game. Your returns, ultimately what you're judged on is DPI to investors, your returns over a 10-year cycle. And that takes a long time. But that is ultimately a fact. There's an output, right? But everything that we're creating right now is the input and the operation. And so we can build the operations, we can build the input, we can test that we are seeing the right deal flow. We can analyze whether we can track companies that we've said yes to and not said yes to and track how they progress. We can measure our NPS with founders. We can do a lot of stuff to check that our inputs and our processes are as good as they possibly can be. And so we're always, we're building in these kind of feedback loops internally. And the output of that will be great returns for LPs, but there's a lot you can learn and iterate on before you get to that point. And one of the things that was on my to-do list this year was measuring inputs and measuring processes and getting that right, because the output that's a factor that'll come, but you got to get the structure and the product right in the first place.
Are you able to share what any of those inputs are and how you measure them?
Look, I think one of them is we basically track what coverage we have. So we look at deals that are done in the market and we check like how many of them we've seen. We're not quite there yet, but we're very keen to, we're going to start tracking founder NPS to understand how we think it's really important that every founder that has an interaction with us has a positive experience, whether we invest or not. And I think the only way the way you track that is by having some kind of NPS score, which you get people to you get people to fill in. So that's kind of two examples of things that we are tracking basically.
And you mentioned about ambition and your time at Apple kind of really shifting that. What's the ambition? What's the vision behind SideStage?
Yeah, we want to be the preferred partner for the best early stage founders in Australia. We think that, we want to be the preferred partner for the top 1% of founders. We want to be the best place for them. And we're going to be here for the next 25 plus years. And, we think there's a really big opportunity, particularly at the early stage, pre-seed and seed, to build a kind of really meaningful institutional fund that backs the next generation of great founders coming out of Australia.
Love that. And for any founders that are listening that are potentially going through a fundraise now or are looking to raise in the near future, what are things that SideStage is looking for?
Great ambition, great ideas, great people. Hit us up.
What's the best way for them to do that?
Twitter, LinkedIn, hello@sidestage.vc, lots of ways.
Yeah. Every VC is looking for deals, right?
Yeah. Look, we're a pretty open book. We love to meet people. If it's right for us, that's great. If not, hopefully we can kind of help and point you in the right direction.
Love that. On that note, I'll make sure all of those links in the show notes. Ben, it's been an absolute pleasure having you on.
Thanks for having me, man.
Cheers.
Thanks for listening to episode 172 of the Startup Playbook podcast. As always, full show notes from this interview will be available at startupplaybook.co. I'll be back next week with another episode, but in the meantime, if you enjoyed this interview, please don't forget to like, share, and subscribe. As always, thank you for tuning in, and I'll see you next week.